So HELOCs, why as an investor do you need a HELOC? Why is that important, especially in times like this? The money's tightening, lenders are getting a little harder to actually give you all the money you need for a flip, for a rental, whatever. Today we're going to go over something that more and more people are calling us, asking us about, and that's HELOCs. Why a HELOC, why it's so important for investors, and why you need to do it now. So why HELOCs? What does it mean to an investor? It's one of the easiest ways to tap into money to actually create more money. So let's go over some benefits of a HELOC. What can you use a HELOC for as an investor? Number one, down payment on any loan. It could be a hard money loan. It could be just your traditional loan for a rental. Anytime that you need money to bring into the table for a down payment, you could take that money off your HELOC, bring it to closing, and use it as a down payment. When you're looking at the rentals, the only thing is they'll require that that money is included in your debt ratio. But you could use the money. You don't have to take it out of savings. You don't have to take it out of 401k. You can use this money from a HELOC for your down payment. The other big thing is construction costs. So if you're doing a flip, even if you're doing a BRRRR, there's going to be some construction costs in there if you don't want the hard money lender or the bank to pay those, because that comes at a cost too. HELOCs, one of the nice things it's probably going to be the cheapest money you find out there, and it's actually going to help you lower the cost of some of those other items. But construction costs, what if your contractor needs the money right away? You don't want to put in a draw request. You don't want to go through the escrow process. You just pull it off your HELOC, pay them, keeps it going, keeps your project going on time. So investors are also using it for carry costs. What are carry costs? That's your monthly interest. That's your monthly HOA. Anything that you have to pay for that transaction, if it's a flip or it's a rental, making those payments. Even it could be some of the carry costs with some of the construction or the materials you do have to buy. Any of the carry costs, you can just pull off your HELOC, and then if it's a flip, when it sells, you can just pay it back off, and you're back to zero with your HELOC. Since there are going to be more foreclosures, more foreclosure auctions, you can also use a HELOC if it's big enough just to go buy a property at auction, or maybe it's just the down payment. You don't have to talk to a lender, figure out what the requirements, even if they're going to lend you the money. You could just go pull it off your HELOC, pay for the property, and maybe if you need to just refinance it later, but at the very least you're going to get those properties that are available at the auctions, and we're going to see more and more of that. That's why as investors you want to make sure you're tapping into all the equity through HELOCs if it's owner occupied or if it's a rental property. One other way I see investors using that is they're buying properties from wholesalers or off of some kind of marketplace or anything else like that. They're buying it quick, so they get the deal, and then they may go back and refinance it with a hard money lender, with a bank, with traditional lending, whatever it is. They're jumping in, grabbing those deals while they're still available, closing faster than anyone else, because all they have to do is go to the bank, wire the funds out. They don't have to go through paperwork, anything else that goes with a loan. Those who are looking to buy something quick, even if they're going to refinance it later in a week to 2 weeks, they don't have to, but a lot of people use their HELOC just to buy properties quickly. So another way I see investors using this is bridging between properties. They have a flip for sale and they need to buy another one. So they use their HELOC to purchase that property until the other property sells. So they create their own bridge loan by using their HELOC. People also use it to lend to other people in the real estate investing world. Maybe they just need some money for a flip. You're probably borrowing it for 5 or 6. You may be charging someone 10 or 12. So you're going to make a little bit of money. Be careful when you're lending money to other people. So it's a great way to get into properties, to use down, to keep projects going. It's an infusion of money that is cheap, easy, and fast that everyone could tap into that has a home that they live in, or in most cases, even rental properties they own. We know how investors use a HELOC, but really what is a HELOC? A lot of people come to us and they're confused. Is it a mortgage? Is it a second? Is it a first? What really is it? And a HELOC is just a lien against a property. HELOCs can actually come in first, seconds, and sometimes even third mortgages. So if you do not owe anything on your house, they could use or put a HELOC on your house that's in first position. All it really is a line of credit. It's something that is set up similar to a credit card where a bank sets a limit and says, I'm going to lend up to a certain amount for a certain dollar amount, and you get to use that. It works just like a credit card, which means you could use it, go to Home Depot and pay for all the materials you need. You could actually go in, get a draft on it, and pay your contractors. You could do anything you want by different means, from wires to debit cards. Anything that is out there in banking right now, you could use that is connected to your HELOC. Once you pay it off, so you've used it, and then at the end of the month or end of the project, you pay it off. What that means is now it's all freed up. You could use it again, pay it down, use it again, as long as the term is still active. Typically what they'll do is they'll set something like a 10-year term. So for 10 years, they're going to allow you to use that HELOC up to the limit that they set. So if your property goes up in value, maybe you want to go in and talk to the bank and get your HELOC refinanced, redone, modified, because maybe you could get more on that HELOC. Any amount that you could get on this HELOC frees up money that you could put into projects that you're not borrowing from other people. Because once you go to hard money, once you go to banks, anything else like that, there's more paperwork, there's more cost. It's just easier, faster, and cheaper if, as an investor, you at least tap in and use everything you can in your HELOC. HELOCs are available not only on your primary where you live, but you also could get HELOCs on rentals. They're just limited. There's different, what they call loan to value, or CLTV, which is combined loan to value. That means what they do is they look at not only your first mortgage, but what's the second going to add to it. So what's the combined loan to value between your first, if you have one, and this new HELOC, which is a second mortgage. And on primary loans, most banks, credit unions, depending on your credit, depending on some income, will go up to 90%, but there's a lot that'll actually go up to 100%. So you could tap into all that equity you've created over the last couple of years as home prices have gone up. That's another reason to do this now, is before things start coming down a little bit. We're already starting to see some slides in some market. Also on rentals, there are certain banks, there are certain credit unions, even mortgage brokers now that will allow HELOCs in second position that will go up to a combined loan to value, so that once again, that's your first mortgage, adding on your second mortgage, that'll go up to 65 and some all the way to 75% CLTV. Most of them will limit how many they'll do. They might only do 2 properties, some will only do 1. But if you have a lot of equity in your rental properties, you could tap into that now, once again, while the market is still high, lock it in so you get that 10-year lock in there. So they're not going to lower it, because maybe in 6 months, 9 months, maybe your value comes down 5 or 10%. In net, you're going to lose more of the availability on your HELOCs. But where should you look for HELOCs? Where's the best deals? Typically when you're starting out, credit unions are going to have the best rates, the best terms. That's what we found universal, not state dependent, wherever that may be. Check with your local credit unions. Find again, once again, we've talked about this before in other videos, making sure the bank, the credit union you're working with actually likes real estate investors and likes real estate, because they each have their own niche. Some of these banks and credit unions, they would rather do a car loan than a HELOC. They may want to do credit cards over HELOCs. So just check with them, but overall you're going to find the best rates and terms with credit unions. Next on the line is local banks, because local banks love to work with real estate investors. They have probably more products available to you as far as the rental properties, those 65 and 75% kind of LTVs, maybe even blanket loans, HELOCs on multiple properties. Last is everything is changing. The refi boom has gone away. So now national lenders, national mortgage brokers are also starting to offer HELOCs. So it opens up more products. What you're going to find is probably the cost is a lot more down here than up here. So if you're looking for the best deal, start with credit unions, local banks, and get the best deal you can. That doesn't only mean rate, but it also means loan to value, because you want to maximize the amount of money you're pulling or have the availability to pull out of these properties. If you have more questions, we have a weekly call-in. We go over different things like how HELOCs work, how BRRRR, anything real estate investing, even looking at deals. So check out the link below, See when our next time is. If you're looking for more one-on-one help, send us an email. We're here to help you, coach you through any questions you have in real estate. Take advantage of what's happening out there in 2022.